All right, let's play a little game. There's a company, not in the tech sector, but based in the US, that outperformed companies such as Apple, Microsoft, Palantir, even Bitcoin. Now I'll let you guess which company you think that could be. And I'm talking about a period over 5 years. So not just a short time, but over a 5-year period, outperformed all of those. Now, a little hint, it's a retail company, a kind of fashion retail company. Any guesses? Well, honestly, I wouldn't have guessed it myself either. I just came across this and I was really blown away by their numbers. So let me show you. The company I'm talking about is no other than Abercrombie & Fitch. Now, I'm not much of a fashion guy myself, as you can tell by the black t-shirts I'm mostly wearing. But yeah, apparently a company that used to be extremely popular back in the days. And if you don't know the brand itself, you've probably seen all these boys outside the shops. They went really globally and viral all around the world, where they only hired the best looking models. I don't know why they never called me, but anyhow, I mean, they had all these guys standing in the stores outside to bring the people in, and they were really targeting attractive people in their eyes. That was kind of their marketing gig at the time, and it really worked for a certain time, right? However, too much of that, and they really alienated a lot of other people, and ultimately were one of the most hated brands out there, I could say, because they really only appealed to one certain market, and they almost said to people who are not fitting in their clothes that they shouldn't even enter their shop. So obviously they really lost a lot of people and got a lot of backlash, and also therefore, of course, dropped the share price over time. However, around 2019 or so came a new leadership, especially the new CEO, an amazing lady. Honestly, I've watched a few of her interviews, and the way she turned around the company is unbelievable. I mean, really impressive stuff. Obviously, we talk about the numbers in a second, but yeah, having been to some of those new stores myself in Dubai, for example, they really made it much more different. You can see right away over here, their fashion now, fits all kind of people, right? They really want to be more inclusive. And I actually started wearing some of the clothes myself. They're not as trendy and fashion forward as some of the other brands, but it's going with the times, and it's kind of timeless without having all these big brands. They used to have all these big logos all over the shirt. And of course, they also have other brands. Their biggest part is, of course, Abercrombie & Fitch, but they also have Abercrombie Kids. Then they have also Hollister, right? A big brand that's really been famous around the world. And that's something they're still working on to improve. And then Gilly and Hicks Active, haven't heard about that. But yeah, I suppose most people know the Abercrombie & Fitch brand. And they have reduced a lot of their stores. They used to have way more. Now I think they have around 700, as I heard in the last interview. And then the process of renovating a lot of them to make it more light and easy to go. And honestly, the new stores, as I said, in Dubai, really quite attractive. The price point is good, the quality is good. But anyways, I'm not a fashion channel, so let's look at the numbers and see how they actually performed. And here we have it. I mean, look at those numbers. And I'm really talking about a 5-year period, as you can see over here. Not just 1 month or 2 months. Any company can look great in that period, but really 5 years, which is really quite a long period. So when we look at it and compare it to the likes of the S&P 500, SPX over here, which grew by still an impressive 85%. We have Palantir, a tech AI company, absolutely great growth with 160%. Of course, how else could it be? Microsoft, one of the most valuable companies in the world, growing by 228%. Followed by Apple with an even more impressive 317%. But then, guess what? I have to go up even further to see Bitcoin, which as a Bitcoin investor myself, I'm obviously very happy with a growth of almost 500% in 5 years, so really impressive. But then I keep on scrolling up, and what do we see over here? Abercrombie & Fitch, over a 5-year period, almost 1,000% return. I mean, for a boring fashion retailer, for me, I was really blown away when I saw those numbers. Of course, if I go out and just look at 1 year, it's still going to be the biggest growth over there from all of those companies. So, I mean, I was really floored and impressed by those numbers. So really, really great job. And I think it really goes to show the right leadership can really turn a company around. And you really often invest, obviously in the future vision and strategy of a company, but also ultimately the leadership and management that executes it, right? Anyone can come up with a nice vision, right? But you have to actually execute it and make it happen. So really kudos to them for doing that. Then we head over to Seeking Alpha, which is my stock research website of choice. We can also take a closer look at some of those impressive numbers. Obviously, that's the share price right now. But again, never only look at the share price. That's just a number, right? Ultimately, valuations matter. It's the number of shares times the share price that matters. And that brings you the market capitalization, which is currently just shy of 9 billion. So actually really not that high. But then again, you can't really compare it to any of the big, tech companies out there, which have trillions of dollars of valuation. So here it's still fairly small if you think about it. So technically, they definitely have some more room to grow, I believe. long term. They don't pay a dividend. They actually used to pay a dividend, but then they cut it. We'll come to this in a second. But I think that was actually also a smart decision that really brought them back to real good profitability. Then, of course, you have a couple of reports over here. Really like that. I like that seasonality also, which is always really interesting to see, when are they having the sales and so forth. And you can really see here in November, I believe that's just after Black Friday, something I think that's similar to a lot of retailers. So really strong seasonality. And also, of course, always interesting to see what analysts are saying. Not that I count much on that, because analysts, if they were so smart, they would make their own bets. They're just putting out their own opinions over there. But still, I like to look at it. And it's quite interesting to see what the Seeking Alpha analysts are saying. Most of them are saying sell, but then the analysts on Wall Street more or less say buy, right? So really, again, nobody knows. That just shows you that it's a lot of guessing over there. But interesting also to see what the bulls are saying. They believe the digital sales of Abercrombie & Fitch are still a long way to go, because they really started shifting to a digital realm and selling online, which they haven't really done well before. So I think really that can potentially, obviously, like for any company, provide even further revenue growth and profitability growth, which is good. You have a few things that the bears are saying. And of course, you can see here also the nice growth of revenues, which is important to see, right? It's not only cutting costs and increasing profitability, but you want to see actual revenue growth. I think that's super important as well. Some of the earning estimates over here, the growth. Look at the revenue growth year on year, 20%. I mean, really staggering. That's why Seeking Alpha gave it the A+. That's good to see, right? That's what you just want to see in a company. Strong growth. Even profitability, A- is very strong. I mean, gross profit margin of 64% for a fashion retailer. I find that very strong. EBIT margin, 13%. I mean, kudos to them. Here you see also some of the peers. For example, The Gap, Urban Outfitters, American Eagle, and Boot Barn. Honestly, I don't shop at any of them, so I can't really compare. But you can see already, the market cap. And that way, only Gap is slightly higher. The rest are actually much lower in terms of total market cap right now. Yeah, and if we head over here to the dividends tab, we can see dividend history, and we can see that until 2019, they always paid a quarterly dividend. But then obviously 2020, we all know what happened. They stopped it, and since then they haven't resumed it. And honestly, probably that's one of the reasons why they started doing so well, because don't forget that taking dividend is taking basically some of the profits and distributing it to the shareholders, which is great as a shareholder. But on the other hand, instead, some of those companies, for example, a lot of tech companies, they use those profits or potential dividends to reinvest into the business for research and development or new acquisitions of other companies to further grow the revenue and therefore profitability. So again, there's no right or wrong, but in this case, it seems the leadership really has done a smart move by cutting the dividends, because the total returns are way higher than you would have gotten if the stock price would have continued to appreciate by 5-6% and you get 2-3% dividends. That's actually worse than this way by not having a dividend, but astronomical growth like I've shown you over here over a 5-year period, almost 1,000% return. I mean, wow, I would have liked to be a shareholder at the time. Now, does it mean you should right away log into your broker and start buying Abercrombie & Fitch shares? Well, not too sure. Let me show you a few warning signs, at least in my eyes, why I wouldn't pull the trigger on buying these shares. Despite the nice growth that we've seen, I'm not sure they will continue just as smoothly going forward. And there are 2 red flags for me. The first one is the short interest. So basically, this is whenever there are short sellers, basically people betting against the stock from appreciating. Those are investors that bet on the company dropping in share price. They make money when the share price, instead of going up, starts going down. That's when they make money. And 10% is really very high, to be honest. For example, Tesla, a company that's really shorted by a lot of people because a lot of people are betting against Tesla. They always had a high short interest, but even that is only 3.66%, still too high for me, but compared to Abercrombie, significantly lower. So 10% short interest, I think is really high, because basically what it means, if you have some powerful investors, they could just hire a PR company or somebody else or a whistleblower to come up with some unfavorable PR articles that temporarily can drop the share price of Abercrombie, and they will basically make their money, cash out, and then move on somewhere else. But yeah, 10% is a real high short interest. I would be very cautious with that. And the second red flag for me, we'll see it over here on Dataroma, which is a great website to see insider trading as well. And here we see that all the insiders in the last 6 months, all they did was selling their shares. I mean, those are the people working inside Abercrombie. They probably know the company much better than you or I will ever know. And they are selling. I mean, look at this. When I click on insiders over here, basically I can see all the sales of insiders that have been going on. And you can see all sales, all in red. Everybody has been selling. The last update was on 10th of June. So really, until most recently, director has been selling. The CEO himself, as I just said, I gave her credit for what she did, but she's selling. Look at this, 400,000 shares, a value of 44 million. So they're all cashing out. So they see, we really reached a high point. I mean, maybe they will continue to grow, and I really wish them, because I think they've done a great job with that. But if all of those smart guys working there at the top are cashing out, well, then why would we start buying, right? You would really start buying at the top. And honestly, yeah, look at it. I just scroll down. It's all sale, sale, sale. I mean, unbelievable. And especially the CEO, wow, she's been selling a lot recently. So yeah, maybe just game for a couple of years, bring up the stock price and then cashing out. I don't know. But yeah, that just shows me really I wouldn't buy the stock right now. Again, ultimately, you all have to make your own buying decisions. But yeah, I just found it really interesting that such a kind of boring company can have such an astronomical return. It just shows you can always find some gems in the stock market in case you want to look for them. But ultimately, if you don't think you're going to find the next gem, which honestly, I don't think I would. I mean, I would have never invested in them 5 years ago. Now in hindsight, I like it. I wish I would have, but I don't think I would be able to find those companies in advance. And that's why I'm a huge fan of investing into the S&P 500. That way I benefit from all of those companies doing well. The better they do, the better the S&P will do, and I as an investor will benefit in the process. And since there are a lot of different S&P 500 ETFs out there, in this video over here, I'm going to show you which S&P 500 ETF I'm buying and why this is actually the cheapest possible one that you can own at this very moment. Thanks a lot for watching. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao!